Dear students, in today's class, you are going to learn how to prepare profit and loss appropriation account and partners capital accounts under fluctuating capital method of accounting in partnership. I have already written a problem here on the board. Just we will go through what is given in the problem. After that, we can prepare the necessary accounts in the books of partnership firm. Let us see what is given here. P, Q and R are partners in a firm sharing profits and losses in the ratio of 3 is to 2 is to 1. They commenced business on 1st January 2024 by investing rupees 1,20,000, rupees 80,000 and rupees 60,000 respectively. Here three partners are there, namely P, Q and R. They have commenced a business on 1st January 2024 by investing rupees 1,20,000, rupees 80,000 and rupees 60,000, and they have agreed to share the profits and losses of the business in the ratio of 3 is to 2 is to 1. Partners are entitled to get 5% interest on capitals and 6% interest on drawings. P is to be given a salary of rupees 2,000 per month and Q is to be given a commission of rupees 5,000. P introduced an additional capital of rupees 12,000 on 1st May 2024 and Q invested rupees 20,000 on 1st July 2024 and R invested rupees 15,000 on 1st September 2024. This is the information regarding their additional investment or fresh capital introduced by the partners. Here the date of investment is different in case of all the three partners. That is why while calculating interest on capitals, we should be careful. Next one is interest on drawings amounted to rupees 1,200, rupees 600 and rupees 300 respectively. In this problem, direct interest on drawings is given, but the amount withdrawn by the partners is not given, and rate of interest 6% on drawings is agreed upon by the partners. That is why here what we need to do is we have to find out the amount of cash withdrawn by the partners by considering their interest amount and the percentage of interest on drawings. Okay, profit before making the above adjustments amounted to rupees 80,050. This is the result of a profit and loss account before making all the above adjustments, that is interest on drawings, interest on capital, salary, commission, etc. of the partners. Therefore, we have to make all such adjustments by preparing profit and loss appropriation account. In the profit and loss appropriation account, we get the net result that is transferred to partners capital accounts. Okay, prepare profit and loss appropriation account and partners capital accounts under fluctuating capital method. Okay, here first we will prepare profit and loss appropriation account. Profit and loss appropriation account. Profit and loss appropriation account is the continuation of the profit and loss account that you remember. Whatever the result comes in the profit and loss account, that is the profit. With that profit, we are going to prepare profit and loss appropriation account. Here, profit before making the above adjustments or as per the profit and loss account is rupees 80,050. That we have to take first, that is profit and loss account. Profit and loss account. What is the amount here? Rupees 80,050. 80,050 is to be taken. This is the beginning of the profit and loss appropriation account. Now we have to make the necessary adjustments. Okay, what are the adjustments here? First one is, you see, partners are entitled to get 5% interest on their capitals. First we have to calculate interest on their capitals at 5%. You see here, partners have invested rupees 1,20,000, 80,000 and rupees 60,000 respectively. That is why here Mr. P has invested rupees how much? 1,20,000. At 5% we have to calculate interest. It comes to rupees how much? Rupees 6,000. Rupees 6,000. Because here this investment was made on 1st January 2024 and rupees 1,20,000 is used in the business for the whole year. Because of that reason, what we are doing here, we are calculating interest at 5% for the whole year. On how much? On rupees 1,20,000. Therefore, it comes to rupees 6,000. And Mr. P also introduced an additional capital of rupees 12,000 on 1st May 2024. See, rupees 12,000, this is the additional capital invested by a partner. On this, we calculate interest again at 5%, not for 1 year, because here this amount was invested on 1st May 2024. That is why from 1st May, we need to calculate the period for which the interest is to be calculated. May is to be included because the date you check here, 1st May is given. That is why including the month of May. May, June, July, August, September, October, November, December. Here accounting year is going to complete on 31st December. That is why for 8 months the interest is to be calculated. That is why here I put 12,000 into 5 by 100 into how many months? 8 months. 0 cancel. 4 2s are 8, 4 3s are 12, 3 1s are 3 4s are 12, 200. It comes to rupees 400. See here, rupees 6,000 is the interest on his initial investment and rupees 400 is the interest on his additional capital. Okay, whenever interest on capital is there, that amount is debited to profit and loss appropriation account and credited to partners capital accounts, because here partnership firm has to make this payment to the partners. Therefore, it is an item of income to the partners. Therefore, this amount is credited to partners capital accounts. Here, interest on capital accounts, on capitals, you write. Here in case of P, we have already calculated. Rupees 6,000 is the interest on his initial investment and rupees 400 is the interest on his additional capital. That is why 6,400 is the amount debited here. Next one is Mr. Q invested rupees 80,000 on 1st January 2024 and this amount was used in the business for the whole year. That is why we need to calculate at 5% on 80,000 for the whole year. That is why it comes to how much? See, in case of Q, 80,000 is invested. At 5% it comes to rupees 4,000. Next one is he has also invested an additional capital of rupees 20,000 on 1st July 24. See here, rupees 20,000, that is the additional capital, is invested by Mr. Q on 1st July. Means here this amount is used in the business only for 6 months. That is why here for 6 months at 5% we need to calculate. Here 5% of 20,000 comes to rupees 1,000 for 1 year. Therefore, for 6 months means it comes to rupees 500. Total interest of Q comes to rupees 4,500. 4,000 is the interest on his initial investment and rupees 500 is the interest on his additional capital. It comes to rupees 4,500. Very simple thing is there. Next one is Mr. R invested rupees 60,000 as his initial investment on 1st January 2024. This was used in the business for the whole year. Because of that reason, what we are going to do, we are calculating at 5% on 60,000 for 1 year. It comes to rupees how much? Rupees 3,000. Okay. Next one is he has invested a further capital or fresh capital of rupees 15,000. You see, 15,000 he has invested. When he invested this amount on 1st September 2024, including the month of September, we have to count September, October, November, December. For 4 months, we need to calculate interest here. For 4 months at 5%, 0 gets cancelled. 4 1s are 4, 4 3s are 12, 4 1s are 4, 4 3s are 12, 3 5s are 15, 50 comes. It comes to rupees 250. Very simple thing. In case of R, right, rupees 3,000 is the interest on his initial capital and rupees 250 is the interest on his additional capital. That is why 3,250 I am debiting to profit and loss appropriation account. We calculated interest on capitals. Now, next point is, here one of the partners is entitled to get a salary of rupees 2,000. Okay. Who is that partner? Mr. P. You see, P is to be given a salary of rupees 2,000 per month. That is why here P's capital account, we have to, that's P's salary, I write here, P's salary, rupees how much? 2000 into 12, it comes to rupees 24,000. This is to be credited to P's capital account and debited to profit and loss appropriation account. Next one is Q is entitled to get a commission. That is why Q's commission, where you are going to credit it in Q's capital account. You can also write here P's capital account, Q's capital account. Okay, Q's commission is how much? Rupees 5,000. Rupees 5,000. What else? Next, interest on drawings. Direct amount is given. Interest on drawings is the income to the partnership firm, because here partners are required to give that interest to the partnership firm. That is why that is to be shown on the credit side of a profit and loss appropriation account. Interest on drawings. Interest on drawings. What is the amount? In case of P, already given here, 1,200. Next one is Q, rupees 600. Next one is R, rupees 300. Make the total, it comes to 2,100. 2,100. Right, this is the total amount of drawings. This amount of drawings is debited to partners' capital accounts and credited to profit and loss appropriation account. Only these are the adjustments, nothing else. Now we close profit and loss appropriation account, balance sheet. Here it comes to 82,150. Here also you write 82,150. Whatever balance comes, that balance is nothing but the profit which is transferred to partners' capital accounts. Partners' capital accounts. Capital accounts P, Q, and R. Just to check the total differencing figure here. Here on the credit side, amount is heavier than the debit side. That is why we make the total of this and deduct it from this total. 82,150, 43,150 is the total on the debit side. That we have to subtract 12 minus 3, 9, 1 remains. 39,000 is the differencing figure. This 39,000 is nothing but the net profit which is transferred to partners' capital accounts in their profit sharing ratio, 3:2:1. Very simple thing. Okay, calculate the share of Mr. P. What is the profit? 39,000 is there. His share is 3/6. It comes to how much? 19,500 is the share of P. Next one is share of Q is 2/6. Means here 2 ones are 3 is 3 ones are 3 3s. It comes to rupees 13,000. Next one is, in case of R, his share is 1/6 of this. 6,500. 6,500. Now we'll prepare partners' capital accounts under fluctuating capital method. Partners' capital accounts. Which method we are following here? Fluctuating capital method. Okay. Under fluctuating capital method, we prepare combined account here. Instead of preparing separate account in the name of every partner, combined account can also be prepared. Here 3 partners are there. That is why we provide 3 columns on both the sides. Okay, fine. P, Q, and R. You write P, Q, and R. You write amount in rupees of the last three columns here. Next one is you write here particulars. Here also you write particulars. Okay, how to begin the preparation of a partner's capital accounts? First thing is whatever amount is invested by the partners at the time of commencement of the business is to be shown here on the credit side. Whenever cash is introduced by the partners, journal entry is cash account is to be debited and partners capital accounts are to be credited. That is why here I write cash account, cash brought in by the partners. Mr. P introduced rupees 1,20,000. Next one is Q rupees 80,000 and R rupees 60,000. Even you can write here by cash account or simply can also write cash account. Okay, next one is partners are entitled to get interest on capitals. We already calculated interest on capital. That amount is credited to partners capital accounts. Simply you write interest on capitals. Interest on capital. What is the amount of interest? 6,400 in case of P and 4,500 in case of Q and rupees 3,250 is of R. Then after this, you credit the salary of Mr. P to his capital account. Salary, simple you write here, salary. Who is entitled to get salary? Mr. P. That is why you write here 24,000 rupees per month, rupees 2,000 he is eligible to get. That is why per annum it comes to rupees 24,000. Next one is you write commission. Commission. One of the partners is entitled to get commission here. Who is that? Mr. Q. That is why in Q's account we show rupees 5,000 as commission. After preparing profit and loss appropriation account, we found out net profit of the business that we shared to the partners in the profit sharing ratio, that is 3:2:1. That is why share of PQR now we are going to credit. Here you write profit and loss appropriation account. Profit and loss appropriation account. This is the share of profit of all the partners. You write 19,500 is the share of P. Next one is 13,000 is the share of Q and 6,500 is the share of R. Next important point is, you see interest on drawings is given 1,200, 600 and rupees 300. But what is the amount of drawings here? The total amount withdrawn by the partners is not given in the problem. But with the help of given information, we can calculate this one. How to calculate this? Just you see, partners are required to pay interest of 6% to the partnership firm. That is why here for 6% interest has come to rupees 1,200. That is why we need to calculate how much amount of money is withdrawn by the partner. You see here, in case of Mr. P, rupees 6 is the interest, right? When this rupees 6 will be the interest? See, when the amount withdrawn by the partner is rupees 100, rupees 6 is called as his interest. But here, interest is how much? Total interest is 1,200. It means for rupees 6, which is to be given to the partnership firm as interest for every rupees 100 withdrawn by the partner. That is why for 6 rupees 100 is the total amount withdrawn, but for rupees 1,200. How to calculate this one? 1,200 into 100 divided by 6. 6 1 ja, 6 2 ja 12. It comes to rupees 20,000. 20,000 is the amount withdrawn by Mr. P. That is why whenever amount is withdrawn by the partner, that is debited to his capital account. That is why here you write drawings. Drawings. Rupees how much? Rupees 20,000. Next one is in case of Q. See, for every rupees 6, his drawing should be how much? Rupees 100. But here what is the interest of Mr. Q? Rupees 600. But for rupees 600, What is the total amount of his drawings? That we calculate 600 into 100 divided by 6, 6 1 0, 6 1 0. It comes to rupees 10,000. See, this is the total amount withdrawn by the partners. See, when you apply this percentage, 6% to this amount, you get the same interest. Rupees 10,000 is the amount withdrawn by the partner. Next one is, in case of R, for every 6 rupees, his drawing should be rupees 100. But how much amount of interest has come? In case of R, rupees 300. Therefore, here 300 into rupees 100 divided by 6, 6 5, it comes to rupees 5,000. 5,000 is the amount withdrawn by the partner during the year. Here we have to assume that the amount is withdrawn in the beginning only. That is why here 20,000, 10,000 and rupees 5,000. When the amount is withdrawn, that date is not given. Okay. That is why what we need to do is we need to calculate the total amount withdrawn by the partners on the basis of given information in the problem. Okay, 20,000, 10,000 and 5,000. Next one is interest on drawings. Interest on drawings already given in the problem, that also debited to partners capital accounts. What is the amount? 1,200, and after that rupees 600 and rupees 300. Okay, here total is 750. Next one is 369. 69,750. Here total is 500. 4, 9, 12, 1 remains, 2, 10. 1 lakh 2,500. Next one is in case of P, total is 900. Here 6 plus 4, 10, 19. 1 remains, 2, 4, 6. 1,69,900. Check the total and find out the difference in figure here. 750. Here you write 1,02,500 and 1,69,900. Check the total. 9. Here 6, 10, 19. 1 remains. 2, 4, 6. Okay. Now, whatever the balancing figure comes, that you write balance carried on. Here rupees 700. 8. Next one is 4. 1,48,700 is the balancing figure in case of P. Here 9, 15, 1 remains. 1, 2. Next one is 9. 91,900. And here comes to 450. Next one is 4. 64,450 is the balancing figure in case of R. Okay, just to check the difference, make the total here. Credit side is heavier than the debit side. That is why difference in figures should be shown here on the this one debit side. And here you write balance brought down. For the next year, the same amount will become the opening balance of capitals of all the partners, 91,900 and 64,450. This is the way how we have to prepare partners capital accounts under fluctuating capital method of accounting. I hope you understood the concept. If any doubt is there, you can send your comment, and better you share this video to your friends so that they can also get the benefit of this. Okay, thank you.